Aloha, this is Kurt Nielsen at eMortgage Hawaii, and this is a rate alert for the Hawaiian Islands for September 18th, 2013. Like I promised last week, I told you I'd send out a new video explaining the results of the Federal Reserve meeting, which happened today. And boy, what a meeting this was. What a surprise move. Maybe this is Bernanke's last real surprise as chairman of the Federal Reserve. But I'd like to talk to you today about what happened and how it's going to be impacting rates. The Federal Reserve really threw us a curveball today. This is something no one expected. None of the experts that I listened to had expected what the Federal Reserve decided today. But they basically decided to keep purchasing about $85 billion a month in mortgage-backed securities to keep rates low. And this is coming from a fear that rates went up too fast and the economy really isn't doing as well as they'd like it to be doing. Let's go through some of the comments so that you have an understanding of what they have decided and really how it's going to affect mortgage rates. Basically, Bernanke decided to keep the Fed keep its foot pressed firmly on the economic stimulus gas pedal, which is QE3. Basically what this is the Federal Reserve is buying mortgage-backed securities. They're buying more mortgage-backed securities every month than are actually produced in the marketplace. So they're buying about 45 billion a month, and then as mortgages pay off through refinances or simple payoffs or sales, they're reinvesting another 40 to 45 billion on payoffs. So a total of about 85 billion a month is being purchased by the federal government. And this is to stimulate the economy by keeping mortgage rates low to help stimulate the housing industry. The Fed pointed to the continued high employment and the fact that the federal government is continuing to cut back federal spending because of the inability for Washington to come to any agreement, and a slight slowing that was found in housing due to the higher interest rates. So they're really getting a lot of mixed signals about where this economy is going, and they fundamentally decided not to upset what they were doing in fear that they could trigger a downturn in the economy. Basically, they said that they need more evidence of economic recovery and improved labor participation. Basically what that's saying is they want more people entering the labor market and trying to look for jobs and getting jobs. And they want to see the housing industry continue to recover. So until they get some strong signals that the economy is on solid footing, they're going to keep buying mortgage-backed securities and treasuries. Now, earlier this week, we also heard that Larry Summers stepped aside and chose not to be considered as the next chairman of the Federal Reserve. And he's a very conservative individual and did not support QE3. So I think this was a precursor to this meeting. He knew that Bernanke was going to keep QE3 in place. He was against it. And I think he just stepped aside knowing that the Federal Reserve was not really keeping with his thinking. And that puts Janet Yellen, who is a strong supporter of Bernanke and QE3, to be the front runner to be the next chairman of the Federal Reserve. So this was well received by the bond market, thinking that the economic stimulus would stay in place for quite some time. And this was really well received by the stock market because the stock market loves QE3. It stimulates the economy, keeps interest rates low. So all in all, it was well received by the market, quite a surprise. So look what happened today. Wow, what one day can do. So we dropped. Yesterday we had the 30-year fixed at 4.5% with a small fee. Today we're all the way down to 4.25% on the 30-year fixed. So quite a drop. This is a big one-day drop. I mean, this is big. I had 5 reprices for the better today. So interest rates did decline today, and most lenders sent out 5 different rate sheets today, depending on what hour we're at. So the 15-year fix dropped another quarter from 3.5 to 3.25, and the fees are a little bit different, but pretty substantial decline. Now let's take a look at the other interest rates and We've had a little bit of decline in the 5-year and the 7-year, not as strong, mainly just in a reduction in points. And the jumbo rates have stayed the same. You know, those don't respond the same as conforming rates. They're not as market sensitive because it really depends on the bank's cost of capital. So jumbo rates are still in line with conforming rates, all really good news. We're going to talk a little bit later about what you should be telling your clients about today's decision by the Federal Reserve. So let's look at the mortgage-backed securities market. I showed this last week. Now remember, this is the price of a mortgage-backed security. This is the 3% Fannie Mae bond. Now, back in May, if you remember, Bernanke started talking about ending quantitative easing 3 and start tapering around the time of this meeting. And look what happened during that time. We had a dramatic drop in the price of mortgage-backed securities, meaning rates went up. Remember, rates go the opposite direction than the price. So all this time, mortgage rates were going up, 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 up. And then today, this big, long green spike, meaning the price went jumping way up, 122 basis points, all on one announcement that he's going to continue QE3. And this is pretty dramatic. So I think we're going to see, you know, prices stay up in this area, continue, maybe a little bit further reduction in rates. Might get as low as 4%. You know, I don't know, maybe 4 1/8, 4 1/4, but really good news for the market, good news for your clients. It is short term. They've got to stop QE3 at some point, so this may be the last hurrah for your clients. So I think what you need to be telling your clients, mortgage rates are set to drop. They did today. Alert your clients because this may be the last chance to get absurdly low rates. Again, mortgage rates should be somewhere up around 6% right now if the federal government was not intervening and buying mortgage-backed securities. They're simply overwhelming the market with purchases, keeping these mortgage rates low. It cannot last long, but I see this lasting through the end of the year unless we have some other outside influences that are political, Syria, you know, other issues such as that. Okay, the last thing I wanted to mention, I am going to be holding some seminars beginning in October to talk about the qualified mortgage. These rules start in November. They're actually already starting with some lenders, and I want to explain how this is going to affect your clients, what you need to know about qualified mortgage rules, and it's very important. If you'd like to attend, you can email me at kurt@emortgagehi.com. Again, kurt@emortgagehi.com, and I'll send you an invitation once we set up the dates on each island. So I think it'll be important for everybody to get their arms around. I do think this is the last big change in rules. I think from here on things will settle down, and I really don't see anything after 2014 of major significance, maybe some tweaking here and there. So I think this is a good time to really get your arms around what the new rules are going to be. And finally, if you want my new smartphone application, it's a great product. It shows mortgage payments for conventional loans, FHA, VA, USDA, because you know mortgage insurance is different on each one. It shows current rates. It's got training videos on it. Just to install it, you open it on the browser on your iPhone or your Android, type in this address right here, tap your forward button, add it to your home screen, and then press add in the upper right hand corner. Then you'll be prompted for your name, email address, and cell phone. And this information you can share with your clients fairly easily from the application. So, but anyway, thank you for listening to this alert. It's great news for us, unexpected. And I hope it does spark some new purchases for the realtors here in Hawaii, and hopefully we'll head into the holiday season with a lot of new transactions. Thank you very much.